Hi everybody, Eddie here. Just going to do a quick market update for the week coming. Um, Before I continue, please like, subscribe to the channel. It help with the algorithms. Thank you. And so last week, very interesting week. We have the FOMC meeting. Everybody thought that we might begin the 75 basis point raise, and then we didn't. They actually ruled that out and said that we probably want to just going to stay 50 basis points, and then we have a huge rally for that day. So I thought we were going to rally up to 8-day moving average and pause, but we actually rallied straight up into the 21-day moving average, which was this resistance area right here. So we made a lot of money day trading this day because it was a really, really good day to trade on. And anyway, I thought we were actually going to continue or just pause right here for a few days and then continue higher. But instead, the next day we actually gapped down and had a huge sell-off. That was really unexpected. I did not see that coming at all. And then on Friday, we have a continuation. On Friday, we actually went down. We tested the lows once again of the May 2nd lows, and then we bounced back up and closed off with a doji. So this is a reversal candlestick, except that it does not mean we're going to stop selling from here, right? So we won't know till next week. The key areas to look for is still this low right here. We break this low, you want to hedge, you want to short, you want to do whatever on the downside that you can profit off, right? Because if that thing breaks, we're going to have a little bit of support around that 4,000 area because there is a gap right here that needs to be filled. And then if that breaks down, we're talking about the lows right here around that 3,700 area. And then it will be the pre-COVID highs right over here. So it's quite a bit ways down. If we do come all the way down to pre-COVID highs, which can happen if momentum picks up, right? So from where we close off, if we go down that far, that's another 17% drop. So it's quite a bit down, right? So you want to be very careful if we do break this area right here. If we start breaking down this area, you can short down to 4,000 and then see what happens at 4,000. If 4,000 holds, we could see a very good pull, bounce off that level and pick up some momentum on the upside. If not, it's going to have a lot of momentum on the downside. So you want to be very careful and make sure you pay attention to these levels right here. What I want to see next week is to actually see this flatten out, continue flatten out, just consolidate between this 8 and 21 and let it get flattened out so we can rally back up and perhaps make like a big double bottom play, right? So you can see right here, we went down right here. We went up halfway, 50%, came back down exactly around this area. We could rally all the way back up to the highs. That would create something like a double bottom, which is like a W shape pattern, and then we can break into new all-time highs after that. So this could happen. That's another scenario. So we won't really know until next week to see if we can actually break this range. So the range would be if we break the highs of this consolidation, would be momentum will be towards the upside. If we break the lows on these levels right here, then momentum is going to be in the downside, and then it's just going to continue to break down. Where you really want to look at is the 8 and 21 in this case scenario. You want to see it break above these areas in order for some continuation. If not, then it's still a bearish bias. Okay. RSI is down in the lower end, and MACD still momentum still kind of downside. So I do see that there's a little bit of momentum start shifting a little bit during the week, but nothing's confirmed until we actually break this level right here. Right, onto the Qs. So the Qs are much weaker. As you can see, the Qs actually broke below the previous lows right here and actually making a lower low and with high volume. So that's not really a good sign. You really want to see next week to rally back up and perhaps break this level right here. If you can break this level right here, we can like chop around right here before going back up, right? There's still some hope if you can stay up here. But if we're going to make new lower lows, it's just going to continue lower. So you want to be very careful holding some tech names right now. And a lot of the tech names are breaking down, like Amazon is, Google is, a lot of things are, and we'll take a look at those a little bit later. Right. So yeah, the indexes are not looking good at the moment, and hopefully it'll change next week. But if not, prepare yourself for some more downside. Okay. Take a look at the VIX. The VIX is staying elevated. This is about 30. That's really high volatility, and you want to pay really close attention to the VIX. If the VIX comes back down below 22, you'll stabilize around this area. Then the market could calm down and start showing some signs of strength. But if it stays elevated around up here, that means a lot of people are still hedging and predicting that there's some more downside, right? So this is a area that I pay attention to, and if we break above this 38 area, it can go really crazy. So you might want to set an alert around that area. If that happens, the index could be picking up a lot of momentum on the downside. All right, let's take a look at some stocks. So Tesla. Tesla's doing not too bad. Tesla's actually still making a high low from the lows of March, which is still a good sign. It's trying to hold this level, this 850 level right here. This is a pretty important level to hold. If it holds this level, it confirm it's still a higher low. As long as it stays a higher low, it can continue higher and make a higher high, right? If it comes down and go back to like below 800, then it's no longer a higher low, and it can just chop around or actually break down. So you want to pay really close attention to this level right here to see if it actually hold for next week. Right, momentum is down. You can see it's below all moving averages, but if we pick a really good day, it can actually break right through all of that in a day or two. So I mean, it is Tesla. It can move quite fast in the other direction, and pull a short squeeze or something like that, and you can really rally hard. But we'll see what happens. All right, Microsoft actually staying fairly good. It's staying, it's holding this support level right here. It's trying very hard. As you can see, it's been tested multiple times in this support zone, and it's trying to hold. What you want to see next week is actually a break above this range right here. There is a gap right here that needs to be filled. If you actually bounce back up and fill that gap and actually break back above the 200-day moving average, this is the zone. If you can break above this zone, you can go higher, right? If you break above this zone, most likely we're going to test the highs again, right? But if it finds a higher time around this area, most likely it's going to break this level right here and continue lower. If it breaks this level right here, it can get really ugly really fast. Right, so it can fall all the way back down to $200 if it breaks this area. So you might want to set alert. If you're in Microsoft, you want to set alert on this right around this area, just set alert. And if you own TradingView, just set an alert right here. And then if it triggers the alert, you might want to buy some puts or sell your shares. So Google broke down last couple of weeks. This is the main support area, and it did break down with momentum, and right now it's chopping around this area. So 2200 is the next level of support. It is hovering around that area, and hopefully you'll hold this area. If not, if this area breaks down, it can come down to these levels, like right here's one, right here's one. So there's a few support levels on the way down, and Google is one of the better names, the better tech names to invest in. So if Google start breaking down, the index will come with it, right? Apple, so Apple's the stronger of the bunch. It is still a higher low on Apple, right? And as long as you can stay a higher low, you can still go higher from here. It is just a consolidation as far as Apple goes. It's not quite as bad as the other stocks. It's holding actually fairly well versus the other tech names. And hopefully there'll be some sign of strength next week. It really needs to break above that 50-day moving average right here for continuation higher as well. And Nvidia, just like other chip names, they're fairly weak. It's trying to hold this main support area right here at 178, 180 area. Um, if you can hold this area, what you're looking for really is just around this 220 area to bounce back into. I would probably sell that area. There is a gap right here that needs to be filled, but 220 would be a pretty big resistance area, and then the next big resistance is around 250. So it's trading below. It's trading at 186. So that could be a pretty good bounce. So if you are going to play the bounce and set your stop probably below 178 there. I would set it probably around 176. Yeah, if it breaks down, just get out of it really quickly if you want to trade it. Right now, I probably wouldn't touch any of these names. I only would day trade it. So if I were to play tomorrow, I look for levels to break. So if you can break this $200 level, I would day trade on the upside. But other than that, I wouldn't touch it right now. And take a look at Amazon. So Amazon completely broke down. They actually have a huge gap down after earnings. So yeah, that is a really bad sign for Amazon. This has been a range for a really long time, and now we broke down off that range. So the next area of support is at that 2185, let's say 2200 psychological area. And then if that breaks down, you're looking at about $1,800. 1,800 would be interesting. If it falls down to 1,800, you could consider buying some for the longer term. I mean, it is still one of the biggest names out there to trade, and one of the better growth names in the space as well. So if it's at 1,800, you can nibble at it for the longer term. And you might not get these prices again either. So it wouldn't be a bad idea to get some shares of it and just hold on to them for a longer term around this level, right? The key area is really 1,800, and then it's 16, and then you can go as far as 1,400. Hopefully it won't come down to that, but you never know nowadays. So those are the names that you want to really concentrate on, because they're the biggest names in the indexes. So if these names start dropping down, you can see the index will drop with it. So a lot of these big tech names is what dragged the index down last week. So if they start rallying back up, you can see the index start recovering some as well. All right, and maybe I'll go through some of the different sectors as well. So let's see, go on hack. As you can see, these names are all breaking down. Like hack is the cybersecurity area. You would think that cybersecurity stocks would consider go up considering the war with Russia, right? But no, it broke down. So that's why these levels are so important. Once they break the moving averages and it picks up momentum, there's no point to hold on to them. You either have to hedge them if you do decide to hold on to, or you get out of them as well. So hack completely out. IHI, same thing. Healthcare sector, medical devices. Once that start breaking down as well, it is coming down. It is at support area right here. So hopefully you'll hold right here and then bounce back up. But this is one of the sectors I really like for the longer term. So once the market stabilizes, so this would be one of the ETFs that I will be getting back into once it stabilizes. Right. SMH is semiconductors. Semiconductors, you can see is trending down. It is at a major support area as well. So this is the area you really want to see. So if SMH holds this area, most likely NVIDIA, AMD, and other chip names will most likely hold the area as well. All right. Let's see. Energy made new high, right? So I was talking about last week that we were falling down, and then we were once it came back above the 8 and 21, I actually did get back into it for a little trade, but because of Friday, I actually got out of the rest of it again. So I did do a quick trade and made about like I think it was 5-6% on the stock. I was just trading the stock, but he actually made a new high on on Friday. So that's a really good sign for energy stocks, right? So I might actually get back into it next week if it continues to pick up momentum, because once it break, if I go on the weekly chart, once it breaks this major resistance area right here, this 83.60 area, there's a lot of upside. It can go up to $100, right back to all-time highs. So if it does pick up momentum and actually break through this, it's going to have a parabolic move up to here, right? You want to ride that up and then get out of it as quick as possible at the top upper end of it, right near that $100 area. I would get out early, maybe around 95, 96, if it does break above this area right here. All right, so I'll take a look at it next week. XLF, that's your financials. Same thing. It's breaking down. It's below the 200-day moving average. It's near this support level that's been tested multiple times, and it does look like it wants to like come down further. So if it does start picking up momentum on the downside, is quite a bit of room on the downside as well. Industrials, this is industrials right here. So it's still trading in the range. It looks like it does want to break down, because you can see it's making lower highs. It's not making a lower low just yet, but if it does break down this level 93.39, it will become a lower low, and then it could start trending downwards, right? So that's pretty much it. You guys really want to be careful next week. Have a plan. If things break down, know what to do. If you're going to hedge. If you're going to short. Yeah, but the best thing to do is actually go cash if you start breaking down. And if you don't have such a big loss yet, I would raise some cash and then hedge the rest. And then once he finds a bottom, you can deploy that cash and get it for a cheaper price, and hopefully make back some of the money that you lost during this downturn, right? If you're already in cash, then you're in a good spot, right? Because you could find opportunities and then get into some trades. For me, right now I'm almost all cash. I do still have some long-term positions, but it's only the index. I only have a little bit of SPY and QQQ left. I actually start turning on cash when we start breaking down. Once I start seeing these down days, such huge down days, you really don't want to hold it, even if you hedge it. I was fully hedged, but I decided I just rather take the cash and then just buy it cheaper once it finds a bottom, right? Instead of hedging myself, right? I don't really have time to keep watching it and re-hedge every single time it drops down lower. So the best plan was just to go cash, and then I'll just day trade, because right now day trading works really, really well, because these big, huge days is a lot of money, like unbelievable how much money you can make in a day with these big, large candles. So, if you guys want to day trade, I do have a course, and I do live sessions in that course as well to trade as the market reacts, and then I comment on how to trade it. So if you guys are interested, check out my website, leecapitaltrading.com. All right, see you guys later.